Hello, good evening, and welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets, news, analysis, and events, how to apply the best trading strategies prior to news being released and after. We have also some chart patterns at the end of the session. First, I'd like to start the session by giving you some information about me. My name is Ehab Jubil. I was born and raised in Egypt. I have passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Another turbulent week in global financial markets as renewed fears of weakening of Chinese economy and uncertainty surrounding the timing of rate lift off were top of mind for investors. Minutes from the Federal Reserve's July 29-20 meeting gave no additional indication on the timing of rate lift off. Markets explain the minutes as slightly dovish, cutting the probability of a September rate. Alarm bells rang across world markets today as a 9% dive in Chinese shares and a sharp drop in the dollar and major commodities. Safe haven government bonds and the yen and the euro rallied as widespread of fears of China-led global economic slowdown started. With serious doubts now emerging about the likelihood of a U.S. interest rate rise this year, the dollar slid against other major currencies. The U.S. dollar index opened up at 9-week lows and likely to see further selling pressure. It's tackling the dovish FOMC minutes. GDP and inflation data on Thursday could make a lively event if either fall short of expectations, as it will be viewed as further evidence of rates remaining on hold into 2016. Traders will find out who will be attending the Jackson Hole Symposium. Whilst Janet Yellen is not attending, there is likely to be high-profile federal members, so any commentary regarding the much overhyped and misleading September rate hike will be on traders' mind. The Australian dollar has fallen to 6-year lows, and many emerging markets currencies also plunged, whilst the strong dash to safety pushed the euro to a 6.5-month high. RBA minutes last week revealed RBA still expect Federal to raise rates. This is now a less likely scenario following the yuan devaluation and tumbling stock markets. Further pressure would be added for a rate cut if China continues to devalue their currency and or print weaker economic data from China, of course. Commodity markets took a fresh battering. Brent and US crude oil futures hit 6.5-year low as concerns about a global supply glut added to worries over potentially weaker demand from China. US crude was down 3% at $39 a barrel, while Brent lost 2.4% to 43.5 a barrel, and it keeps going down. Copper, seen as a barometer of global industrial demand, tumbled 2.5% with 3-month copper on the London Metal Exchange, hitting a 6-year low of $4,920 a ton. The second estimate GDP data on next Wednesday, is forecast at 2.6% yearly and 0.7% monthly. Second and the third final estimates tend to come in pretty close to the initial reading, but any notable deviations from the initial release could still move GDP or the pound crosses either way. Kearney speaks on Friday, so as per usual, any commentary regarding monetary policy will be closely watched. A quiet calendar for the Canadian dollar, so traders may take their cue from tumbling oil prices and the dollar strength. However, if we see the current negative sentiment continue this week, the shorting Canadian dollar against yen and Swiss franc is something to consider. We should consider shorting Canadian dollar against yen and Swiss franc, as these currencies are benefiting from safe haven inflows. Euro crosses have benefited from the US dollar weakness and the third Greek bailout finally getting approved. Euro Canadian dollar is rising highly in true parabolic fashion and likely to attract buyers upon retracements. So we should watch scarce pair for retracement to enter the market. German IFO business climate is expected to remain elevated, although down slightly to 107.6, and it was previously 108 previously. So unless there is a big miss, then I'd expect this data to help support euro crosses. Traders will then shift their focus to German inflation data on Friday and Jackson Hole Symposium for dollar or US dollar close. This week we will watch these events all in London time. 27 Thursday 1:30 p.m. we will watch US quarterly GDP. Friday at 9:30 a.m. London time, UK quarterly GDP. I will talk in more details about this news. UK revised GDP will be released on August 28 at 9:30 a.m. London time. UK revised GDP is a second GDP release for the quarter 2 of 2015 period year, and since this is the second release for the same quarter, most data have already been made available. It is less likely to surprise the market, but in the event there is a surprise. If there is surprise, we would follow our trade plan. The forecast for UK revised GDP 0.7%. Previously it was the same 0.7%. Our trade plan. Since this is the second release of the second quarterly GDP for 2015, we are likely to get plenty of reaction if we get a surprise, as most second releases do still have the potential of surprising the market. Considering the recent positive trend in the UK economic data, we may get another surprise release. However, we will still be looking to trade the release using our after news retracement method. Our surprise or deviation factor is around 0.3%, as we will look to possibly sell or make fall or down option of the pound at 0.4%. So we will sell the pound at 0.4% release or worse, and we will buy the pound at 1% or better. If our surprise factor hits, the market will move up to 50 or 70 pips within the next 2 hours, because GDP is a very high impact report. And usually the market keeps the same trend for New York session. US prelim GDP quarter release will be released on August 27, one day before UK, at 1:30 p.m. London time. US prelim GDP release is the second release for the second quarter of 2015, which is expected to improve from the 2.3% reading on the advanced reading. We are looking for a minimum deviation of 0.3%, and we should stay out of the market unless we get that deviation. The forecast for the US prelim GDP quarter release at 3.2%, previously 2.3%. How to trade this release? The plan to trade this release is we are looking for a deviation of 0.3%, the same like UK, deviation of 0.3% from the forecasted figure of 3.2%. So if we get 3.5% on the second quarter release, it would be US dollar positive. It will be positive for the currency if we get 3.5% release. We will buy the US dollar. However, if we get a 2.9% release or worse, then we would be selling the dollar. So we'll buy the dollar at 3.5% and sell the dollar at 2.9% or worse. We will be looking to trade this release based on our retracement trading method as we know it now. Since this is a high impact release, strong market volatility is expected immediately after the release, especially the market now is very sensitive for any news. I would recommend to use the default pairs for this news: dollar yen and euro dollar. I will ask about the duration of expiry of the news, how to trade it. The typical expiry for the news trading is 2 hours. Here you can see the trend that you should follow if the deviation number would not hit after any news release for the major currency pairs. So if we don't get the deviation number or surprise number with the release, so we should follow this trend, because usually the market follow its previous sentiment. And this technical summary is based on many of popular indicators. euro dollar, strong buy in short and long term. Pound dollar the same. Dollar yen strong sell, all down trend, also short and long term. Australian dollar is very weak and have downtrend. Dollar Canadian dollar uptrend. New Zealand dollar also strong sell or downtrend. So if we don't get our deviation numbers with dollar or pound or generally in any future news, I will give you always technical summary, so we should follow it if we don't get our deviation number. Now let's have a look at some chart patterns. And this chart patterns was I analyzed before New York session. First pattern with us today is Australian Canadian dollar 4 hours chart. We can see triangle pattern after reversal targeting 0.964. So we can see triangle pattern and the market moves targeting 0.964 at the resistance line. I would expect the market to move upwards, so we can buy up option that can last for 1 or 2 days because this is 4 hours chart. So we can buy up option for expiry or duration of expiry of 1 or 2 days. Australian dollar, New Zealand dollar 4 hours chart. This chart also, and this formation was before New York session. We can see flag pattern with a strong downtrend. I would expect the market to make correction. So we can buy up option for this correction that can last for 2 or 3 days. As duration of expiry, we can then close before expiry if it hits 1.1. So we'll follow the correction. Even so now the market moved down. So we'll expect correction for the market targeting 1.1. So we can make up option or we can make touch option at 1.1. And if it hit 1.1 at up option before expiry, we can close it with profit. Pound dollar 4 hours chart. You can see completed ascending triangle pattern that had just broken the resistance. You can see it broke this resistance upper line targeting 1.578. So then I would expect the market to move upwards because it broke the resistance line. We can buy up or rise option with expiry of 2 days, or we can buy touch option for this level 1.578. I want to remind you, if you missed a webinar or want to watch it again, you can watch it at binary.com YouTube channel. So then I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.